What's going on, guys? Alex here, and today I'm answering your tax questions from the YouTube comments. That's right, you leave questions, I answer them in a video. It's a beautiful thing. This question has to do with the differences between the Section 179 allowance and the de minimis safe harbor for income tax purposes. How are they different? Let's find out. Section 179, and I made a video on this that is shown here regarding the particular details of 179, how it works, what it's applicable to. That's a pretty in-depth video. So if you don't know about it, check that video out. That'll give you a good foundation in terms of what we're discussing here. And if you make it through that video, you'll understand that Section 179 is an accelerated depreciation allowance, whereby if you purchase assets of particular types, then you may be able to accelerate depreciation on those assets. For example, let's pretend Section 179 and bonus depreciation, all these other accelerated depreciation deductions don't exist for a second, and assume that you are purchasing and placing into service an asset for $500,000. Traditionally, you would depreciate that asset over 5 years for income tax purposes. So you'd get $100,000 of a deduction, more or less. There are different rules applicable to, but that's the idea, in each year, and that's how you would deduct the purchase price of that asset, because theoretically you're getting value out of it for a number of tax years. And with that being the case, it makes sense that you should spread the deduction out accordingly, because it matches the income that you're getting from the use of that asset. It's more of a matching principle involved. Now, if you use Section 179, that's an accelerated depreciation deduction, whereby you can take that 5 years of depreciation and take it all in a single tax year. Why would you want to do that? Well, if you have a lot of income in the current year that you're looking to offset, Section 179 may help you decrease the tax rates that you're subject to overall by accelerating that depreciation. On top of that, if you wanted to pay less in taxes in the current year so you could have additional working capital for your business, Section 179 is one way to accomplish that. So you're still purchasing the assets, you're still placing them into service. The difference is when the deduction happens from an income tax perspective. You can either space it out over time, which can make sense in certain situations, or you can accelerate the deductions in certain situations. And Section 179 is one way to accelerate those deductions in a single tax year. Now, there are benefits to Section 179 in that you get to choose the particular assets that you want it to apply to. You get to elect how much Section 179 you want to use and all that other good stuff. There are downsides associated with it as well. One of those being recapture. So if you have an asset that you used Section 179 to take a deduction for, and then the business use of that asset drops to below 50% in a subsequent tax year in the next few years, you could be looking at recapture of those amounts that were Section 179 deductions. That's a complicated way of saying any benefit that you've received from Section 179 you would lose if you're subject to this recapture provision applicable to Section 179. One of those situations can be that you purchased and placed into service an asset for business purposes, then you switched it over in the next year or the next few years to personal use. That can create a recapture issue. So that's one of the downsides of Section 179. Aside from that, it's still depreciation at the end of the day. Section 179 is a deduction you take by making an election to take it by properly filing Form 4562. Maximum amount in any tax year is $1,020,000, and that's applicable for tax year 2019 and at least a few tax years moving forward. Unless a change in administration changes this amount significantly, that's the ballpark that you can expect in terms of the maximum amount for Section 179. There are other limits applicable. You can't create losses with Section 179, so it is limited to your business income. So that's another downside in that you can't create losses or exacerbate increased losses with Section 179. And if you look at that video I made regarding this provision, you will see those pros and cons laid out in a bit more detail. The key points to keep in mind: there is a limitation to Section 179 that you could take in a particular year, and the business income limitation is also applicable on top of the recapture. So really three things that work against Section 179. So let's discuss the other part of the question having to do with the de minimis safe harbor. What is all that? The final repair regulations are meant to clarify some loose ends and questions about what you should capitalize, what you should depreciate, what you can take a write-off for, what you need to take a write-off for over a number of years after you've capitalized it, and all sorts of things of that nature. And these repair regs were profound in terms of their volume. I mean, you could take a look at this repair regulation. I mean, I'm just going to hold the button down, and you can see how voluminous they are. There's so much information here, and it's so detailed with different scenarios and definitions and exclusions and everything of that nature. But one specifically taxpayer-friendly item in here is the de minimis safe harbor. So the Minimis Safe Harbor, if you take a look at it, you'll see that it is hidden within the repair regulations. Unfortunately, this stuff is very verbose, not very easy to read. So with that said, it's not something that everyday taxpayer wants to spend too much time reading. You're going to drive yourself nuts. On the other hand, the IRS did release a frequently asked questions regarding the tangible property regulations, or the repair regs. And over here, they do have some items that, in plain English, explain what the de minimis safe harbor is all about. So let's read. What is the de minimis safe harbor election? Under the final repair regulations, or the tangible regulations, you may elect to apply a de minimis safe harbor to amounts paid to acquire or produce tangible property. That's property you could touch. So this isn't for patents. This isn't for trademarks or client lists. This is for specifically tangible property, to the extent that such amounts are deducted by you for financial accounting purposes or in keeping your books and records. So this requires book and tax conformity. You can't do it one way for the books and do it a different way for the taxes. They want unity between the tax and the book applications. If you have applicable financial statements, AFS, you may use the safe harbor provision to deduct amounts paid for tangible property up to $5,000 per invoice or item as substantiated by invoice. If you don't have an applicable financial statement, AFS, you may use the safe harbor to deduct amounts up to $2,500, which was $500 prior to 1/1/2016 per invoice or item as substantiated by invoice. So, what are applicable financial statements? Applicable financial statements are those which have been audited. And I'm not talking about an IRS audit. I'm talking about financial statement audits, in which an audit firm like PricewaterhouseCoopers or Deloitte comes in. They don't have to be that big. They could be a one-person audit firm. But the point is that they are an independent party that audited your financial statements. And in that case, you get to deduct up to $5,000 per invoice. The vast majority of my clients don't have applicable financial statements, or AFS. So in that case, you'd be looking at $2,500 as the amount that you can deduct on a per invoice or item level as substantiated by the invoice. This used to be $500, and they changed it to $2,500. So that was quite a bit of an increase. And what they're trying to do is decrease the administrative burden for taxpayers in terms of writing off amounts or capitalizing amounts. This just says, hey, if the invoice is $2,200, $1,000, $1,800, you don't have to spend too much time figuring out, oh, do I need to capitalize and depreciate it, or can I just deduct it? You could just deduct it, all right? And if you make the de minimis safe harbor election, essentially, you're getting the license to do so. With that, there are some limitations and distinctions. The de minimis safe harbor election does not include amounts paid for inventory and land. It does not apply to rotable, temporary, and standby emergency parts that the taxpayer elects to capitalize and depreciate. It doesn't apply to some other things. As with everything in taxes, there are exclusions, exemptions, and so forth. So just make sure that if you qualify to take the de minimis safe harbor for a particular expense, that you know how the rules apply. The way you take the safe harbor election is you add a statement to your tax return as follows. So in this sample return here, we can take a look at the elections and go in here, and we will see that the de minimis safe harbor is right here. And this is the particular regulation that allows us to take this de minimis safe harbor. So if you want to read more, essentially you would type that into your browser there. So 1263A1F. So let's take a look. And let's see if this pops up for us. This is a Treasury regulation. I know it because it's 1.263. So when you see that, you know you're dealing with regulations. And then we're looking at 1F. All right. And let's see here. Minimis Safe Harbor Election. And now we're looking at the regs or the regulations that put forth the provisions for the Safe Harbor Election. And you can see the Minimis Safe Harbor Election specifically. You can see here, taxpayer with applicable financial statement, or AFS. We already know what this means. We just went over it. And taxpayer without applicable financial statement. And you can see there are some exceptions to the Minimis Safe Harbor, all things to keep in account. But at the end of the day, what you could do is go through your list of eligible deductions and you say, okay, which ones are exceeding $2,500 and which ones are below $2,500. The ones that are below $2,500 on an invoice or item level as substantiated by invoice, then you can go ahead and just write those off. All right. And what I like to do on the tax returns is denote those amounts separately. So once you make the election, which looks like this, we'll make the election here, and then we will look at the return. Okay. So the taxpayer hereby makes the de minimis safe harbor election under regulation. We already looked at it. And in this case, it's test client and so forth, but you'd normally see the name, address, social security number, or EIN and so forth. So this is a statement that basically identifies the taxpayer and the fact that the de minimis safe harbor is being elected. So you need to elect this on an annual basis. It doesn't translate from one year to the next. You need to do it every year in which you have those applicable deductions that you want to take under the de minimis safe harbor. The way I report the eligible deductions is I'll, in my work papers, make a list of all those applicable expenses that fall into this de minimis safe harbor category. And then what I'll do is come to, let's say, Schedule C if we're working on sole proprietorship, go to other expenses and put in something like this. Now, this is limited in terms of the text length. So I'll put de minimis safe harbor, and then we'll identify that we're classifying amounts that are below $2,500. And the way we do that, right here. So de minimis safe harbor, and this amount could be $18,000. It could be $50,000. It could be $80,000. This is an unlimited deduction, assuming that on an invoice level, you're not exceeding that $2,500 amount. And of course, there are anti-abuse provisions that say you can't just split an expense into multiple invoices just for the tax implication. It needs to be legitimate. But with that said, if you have a bunch of legitimate expenses that qualify for the de minimis safe harbor and are under that $2,500 threshold each, you can combine a bunch of them, and your overall de minimis safe harbor election can well exceed that $2,500 amount when you add everything together. So I like to separate it out into its own other expense line item, specify that it's below that $2,500, that we acknowledge that, we're aware of it, and we put it on the return that way. So when we look at Schedule C, we could see that there are other expenses of $18,000, and if you scroll down here, you'll see that there's a de minimis safe harbor of less than $2,500 of $18,000. So we're acknowledging that that's applicable. The election is on our return. That's how everything comes together. Going back to the question, why would you elect the de minimis safe harbor election over Section 179? Well, let's look at the three downsides of Section 179. First thing is the limit. You got to remember that Section 179 has a limit on an annual basis of that $1,020,000 at the moment. So if we're coming up onto that limit of Section 179, then a way to take even more deductions is to say, hey, we're going to take the de minimis safe harbor. Let's calculate all those amounts first, and let's take the Section 179 on whatever's left so that you're getting the maximum benefit of 179 and you're taking the de minimis safe harbor for all those applicable expenses. So you get the maximum juice out of those deductions. You're not just hitting the Section 179 threshold and being done there. All right. I'm not going to talk about bonus depreciation here. I don't want to complicate things, but that's the general idea. Section 179 has a limitation. De minimis safe harbor does not. So whereby you do need to track that $2,500 limit for the de minimis safe harbor. In aggregate, those expenses can be whatever. So you can get more of a benefit if you take the time to see what expenses are eligible for the de minimis safe harbor and make the election, take the deduction there, and focus your Section 179 to be within the limit for applicable tax years. Secondly, there is the income limitation for Section 179. So you'll see here that whatever the business income is, that limits Section 179 deduction. So if your business income is $1 million, your Section 179 is 1.5, you're only going to be able to take $1 million of that Section 179. 500,000 is going to be carried forward to a future tax year. So it's limited to your business income in a particular tax year. That's the downside of Section 179. On the other hand, the de minimis safe harbor is not limited by your business income. So you can see here that it can create an expense, which can also result or exacerbate a loss. So there is no income limitation that's applicable to the de minimis safe harbor that is applicable to Section 179. So Section 179, you're limited by business income. De minimis safe harbor, you're not limited, and you can increase a loss or create a loss with the de minimis safe harbor. Powerful stuff. Just remember to make that election added to the return. Thirdly, recapture. All right, I mentioned those three things that are downsides of Section 179. They're not applicable on the de minimis safe harbor side. So if, let's say, you put a bunch of assets into use on the Schedule C for your business, let's say it was $3,000 in total, and the next year, for whatever reason, the business use of those assets drops below 50%. On the Section 179 side, you're going to have recapture, which means that any additional benefit you gained from Section 179 over standard depreciation, standard maker's depreciation, is now going to be income. So there's recapture there. It's negative implication of the business use falling below 50%. On the other hand, with the de minimis safe harbor, there is no such recapture. Now, when you go and sell those assets down the line, that's when you'd be taking the tax hit. But there is no immediate recapture in the tax year in which the business use of the asset falls below 50%. That's what the de minimis safe harbor. So powerful stuff, and you definitely want to understand the pros and cons of Section 179 versus the de minimis safe harbor, and also throw bonus depreciation in there as well, because they're kind of a trifecta of depreciation goodness, but each one has its applications, its pros and cons, and usually there's a bit of strategy that can be put in place to try to maximize the benefits to achieve whatever goals you have at the time. Some businesses want to free up as much cash as possible, reduce their taxes. That may be one of the goals in accelerating depreciation. Some taxpayers say, hey, I'm going to have much more tax to pay in the later tax years. I want to spread out my depreciation. So you take that into account as well. All right. So Andrew, hopefully this helps shed some light on this issue and provide some clarity in terms of Section 179 versus the de minimis safe harbor. There are certainly situations in which one is applicable over the other, and there are definitely pros and cons to take into account. But with that said, if you enjoyed this video was valuable and fascinating for you, feel free to hit that like button, subscribe to the channel, leave a comment below, and if you leave an interesting question, I may just address it in a future video just like this. And with that said, hopefully this was helpful. Thanks for watching.